Welcome to this debrief of the PM pre-June 26 mock. I'll run through the Section A questions. I always advise my students to be selective on their first run through of Section A, to focus on the simpler questions, ones they can answer more easily. And if it's one they think will be more difficult or one that's going to take a bit more time, I recommend they flag it, take a guess and then move on, and then use the review screen to come back if they've got time. And I would typically allocate 54 minutes of the exam for all of Section A. By using this approach where you're flagging the difficult ones, hopefully you'll get through and then you'll come back and use the remainder of your time trying to get the next lot of easiest marks. And it might be you leave a few very difficult questions or very long questions with just a guessed answer, and that's fine. What you've done then is strategically taken an approach to get the easier marks. Anyway, I'll go through in order. I won't use that approach because it's easier if I've done them in order for students to find particular questions if they've struggled with them. Let's start with question 1. Which of the following statements describes the theory of constraints? The first option, the marginal return generated by an additional resource will start decreasing at a certain level of production. This is describing the law of diminishing returns. Next option, direct labour costs should be treated as fixed costs in the short term because these costs are unavoidable in that time frame. That's linked to throughput accounting. Third one, in a labour intensive process, improvements in efficiency would eventually cease when staff reach their physical limits. That's related to the learning curve, in particular where the learning curve ceases to have an effect. So by elimination, we know it's the bottom one. In every production process, there's at least one factor which limits its performance and as a result, its output. That's one of the core ideas behind the theory of constraints, that every system has at least one bottleneck or one constraint. So that's the correct answer. Question 2. Which of the following reasons would explain the variances? Mira is evaluating variance analysis data for her business. She finds there is an adverse material price variance and a favourable material usage variance. So we need to find out which of these could explain those variances. Number 1, loss of bulk discount on material purchases. A bulk discount means the price you pay for materials is less than if you didn't get the bulk discount. If you lose that discount, that could certainly lead to an adverse material price variance. So 1 is correct, which means it's either this one or this one. That means 3 has to be correct. In terms of efficiency, I'm going to check 4 next. Production delays due to the late delivery of material. If there's a delay due to late delivery, that's not going to affect the price paid for material or the amount of material used per unit, which means the correct answer is this 1, 1 and 3. For completion, I'll go through the others. Excessive waste of material due to poor training. That wouldn't affect the price paid. It would create a usage variance, but it would be an adverse usage variance. And number 3, higher quality material used than standard. That could lead to an adverse material price variance because higher quality material generally costs more. So higher quality material often leads to a favourable usage variance because there's less waste or it's easier to handle. So 3 would explain both variances. 1 would explain the material price variance. Correct answer 1 and 3. Question 3. What is the sales mix contribution variance in dollars? Company has the following sales budget and actual results. My approach to doing these in the scratch pad is generally to set up a little table to help with the calculation. So in order to do a mix variance, we'd be looking at the actuals versus the actuals at the standard. What I mean by that, so we'll be looking at the actual sales, the actual ratio or the actual mix. That's what actually happened. And then we'll take what actually happened and we will reprofile it as if it had followed the standard or the budget. And then we'll compare the differences. The reason I like a template is it is more effective at going to get the right figure from the information. Because often on variance questions, we have a lot of information that isn't useful. And it's easy to get stuck. Which number do I use? Whereas by having a template, I'm now targeting what I pull out from here. So the actual sales at the actual ratio, well, we've got actual here and it's here. So it's 1100. And for B is 700. And if we total those, we get 1800. The actual sales at the actual ratio should also be 1800. We take this figure, and bring it across. But instead of looking at what happened actually, we'll look at what happened if they'd followed the standard or the budget. So the budget, you can see for every 500 units of B, they expect to sell 1,000 units of A. So it's a 2-to-1 ratio, or we could say 2/3 would be A and 1/3 would be B. So 2/3 of A, 2/3 of 1,800 is 1,200 and 1/3 is 600. Now we have our difference, which is just the difference between the two. With mixed variances, these should cancel out. One of those will be 100 favourable, one will be 100 adverse, and we use the contribution per unit, which is 20 minus 12, so that's 8, and here it's 20 minus 15, so that's 5. So the variance is the difference times the contributions, that's 800 there and 500 there. For A, the actuals were 1,100, the standard was 1,200, so actuals were less than standard. And because it's sales, that is bad for our bottom line, so that's adverse. For B, actuals were 100 greater, so that's favourable. So our overall variance is 300 adverse. It told us it was adverse, so the answer here is 300. On to question 4. What's the environmental cost per 100 kilograms of output? The company uses input-output analysis to account for its material. It's collected the following information regarding its production output per 100 kilograms of material input. So of that 100 that goes into this system, this process, 60 leads to the finished product, 20 is recycled and is sold, 15 is disposed of as waste, and 5 is unaccounted for. We've got the material cost of 20 per kilogram, the recycling of 5 per kilogram, and the disposal cost of 3 per kilogram. A little bit of an exam technique here. I recommend using the scratch pad in reverse. And the reason being, if I scroll down and I put the word test down there, and let's say I was doing the next question here, and I do my workings, and then I've answered the question, I move on. Then when I want the scratch pad again, I open it, it opens at the top. And so what I have to do, if I'm working down the page, is scroll down to this bit at the bottom. As it gets longer and longer, I'm wasting more and more time scrolling. If I work upwards on the sheet, as soon as I open the scratch pad, it's at the place where I want it to be. So a little tip there to save a bit of time. So I've made a little table here. So the finished product doesn't form part of this calculation because the finished product is what we're trying to achieve. It's not an environmental cost. So the recycling, we've got 20 kilos and it's cost $20 per kilo. But then they sell it for 5. So they get 5 back. So that's $300. The waste is 15 kilos. It's cost them 20 and then it costs another 3 to dispose of it. So that's 345. The unaccounted for still cost in terms of input. So that's another 100. So the total is 745, which is our answer here. Looking quickly at the distractors, the 645 is probably, if you didn't take into account the unaccounted for waste. The 845 is if you forgot to take into account the 5 per kilogram that they get back for recycling. And I can't easily see where the 700 would have come from. So on to question 5. What's the sales revenue figure which should be used when assessing company performance to one decimal place? Company's got budgeted sales of 31 and a market worth of 62 million. When the budget was drafted, it was assumed inflation would be 3%. At the end of the budget period, it was discovered that market inflation had been 2% and the market had also grown by 6%. So we need to do a couple of adjustments here. We need to take into account the impact of inflation and the impact of the market. The market share is 50%, 31 of 62. So that's a 50% market share. So if we now look at the market of 62 million, within that is this assumption of 3% growth, but it turned out it was only 2%. So if we multiply by 1.02 divided by 1.03, we'll remove the impact of the incorrect inflation and adjust it by the correct amount, which gives a new market of 61.398 million. Now we need to take into account that it's grown by 6%. So we multiply that by 1.06. So the new market, after taking into account these adjustments, is 65.089, but this company expects to have half of that, so we divide by 2 and end up with 32.54. We need it to one decimal place. Make sure you get your rounding correctly. The examiner does comment on that. The student's often rounding correctly. The 4 gets rounded down, so we end up with 32.5. So on to question 6. What's the most appropriate cost driver for dispatch department costs under an ABC system? Stanley Co. sells gourmet food from its website and offers customers a wide variety of food products. Customers are required to select 10 products, which are then supplied to them in a standard size box. So each order is 10 products. Warehouse staff deliver products ordered to the dispatch department, who then pack the food ordered into boxes, print and attach delivery labels, and arrange for a courier department to collect and deliver parcels to customers. Courier costs are a direct cost. So dispatch department costs, what's the best driver? First option, number of products sold. This isn't correct because every customer orders 10 products, which goes into the standard size box. And each box has one label, counts as one dispatch process. So it's not the number of products sold. The weight of products, well, the courier costs are not related to weight, and they go into standard size boxes, so there's probably not too much weight difference anyway. The number of customers, well, a customer could place an order for 1 box or 10 boxes. And the final one, number of customer orders. This is the correct one because a customer order is what follows this process. So if they place an order, they select 10 products, which goes in the standard box size and goes through this process. If they wanted 2 boxes, they would have to do this twice. So number of orders is the best cost driver given the system we've been given here. Question 7. Which of the following statements regarding risk and uncertainty in decision making is or are true? Option 1. Decision trees can be used to generate perfect information relating to a sequence of decisions and outcomes. So decision trees do not generate perfect information. So number 1 is false, which means it's either this one or this one. So I'm going to look at 3 next. Simulation models assign probability distributions to large numbers of product variables and use random number generators to estimate a probability distribution of outcomes for the project. 2 parts to that. Firstly, do simulation models assign probability distributions to a large number of project variables? Yes, that's the process that's used when you're doing simulation. And then after the and, do they use random number generators to estimate a probability distribution of outcomes? Yes, that's correct. So the correct answer is 2 and 3. Just for completion, Maximin approach to decision making is best suited to risk-averse decision makers. And that's true. Question 8. What's the residual income for Division C? So the residual income is the profit. I wouldn't be writing this out in the exam. This is just for the benefit of the video. We take away the imputed interest, which is the assets multiplied by the cost of capital. So Division C, 2 parts of the same company. Got a summary of their residual profits and assets. Divisional profits, divisional assets. The management accountant has correctly calculated residual income for Division D as 208,000. What's residual income of Division C? Well, we haven't got the cost of capital, so we're going to have to use the known figures for Division D to find out the cost of capital and then apply them to Division C. So 208 is the residual income, and that equals the profit of 400 minus 1.6 multiplied by the unknown cost of capital. So I'm going to swap the bit in brackets with the 208. So I end up with 400 minus 208. And then I divide by the 1600, which is now on that side. So my cost of capital is 12%. And then I just do the calculation properly for Division C. So I've got 127,500 minus 850 times 12%. You can see there are brackets available on this calculator. So the correct answer is 25.5, which is this answer here. The distractors, 102,000 was probably if you did 12% multiplied by just the assets. Yeah, and I'm not sure what the other distractors were there. Often what we find is when there's 4 calculations, one is obviously correct. There's normally 2 distractors which are obvious mistakes, and then one is just a random number. Which of the following statements regarding technologies and systems are correct? So 1 is common to these, so if we can eliminate 1, then that will be efficient. Networked computers can save costs by sharing hardware, software, and data. Well, that is a correct statement, which means it's one of these bottom 3. I'll look at 2 next. An intranet provides quick, effective communication with suppliers. That's false. An intranet is not accessible to suppliers, so it's not 2, which means it's one of the bottom 2. I'll look at 4 next. The internet can be used to monitor and measure customer interest. That's true. Things like website analytics, click rates, trends. So the correct answer is 1, 3 and 4. Just to check 3, wireless networks allow businesses to expand with less disruption than wired networks. That's true. It's much quicker to put in a Wi-Fi point rather than running cables all over a building. Correct answer 1, 3, 4. Question 10. What's the total relevant cost of material Z to fulfill the customer order to the nearest dollar? Company needs 400 kilograms of Z to fulfill an order in 1 month's time. The examiner normally only gives information like that if it's useful information to the question. Every so often it is extra information that's not important, but normally that means we need to think about something in terms of timing. It currently has no material Z in inventory, and the current purchase price is 20 per kilogram. And this is expected to rise to 24 in 1 month's time. There you go. So that's where we're starting to look at the 1 month. Material Z is perishable and normally 20% of stored materials lost per month. So they could buy it now at the lower price, but 20% would perish, or they could wait a month and buy it, and then they wouldn't have to worry about this amount that perishes. The company expects to have 200 kilograms of material Y in inventory in 1 month's time, with no other alternative use other than to sell it for scrap at 18 per kilogram. That 200 of Y could be converted into 200 of Z, which is half of what's needed, in 1 month's time at a cost of 4 per kilogram. Material Y is not perishable. So this looks like quite an in-depth calculation, and there's 2 clear stages. So the first stage is to work out, are they better buy-in now or buying in a month's time? One of those is going to be better than the other. Then we take that better one, and then we compare that with what would happen if they converted 200 kilograms of Y into Z. So 1A is to buy it in 1 month's time. That's the easiest calculation. So they'd need to spend 24 and they would buy 400. So it would cost them 9,600 if they did it in 1 month's time. Option B, so it would cost 20 if they buy it now. They'll need 400, but whatever they buy, 20% is going to disappear. So we need to divide by 0.8. What we're actually doing is multiplying by 100%, which is what we need, divided by 80% is what we will have to get the amount they need to buy now. So it's 20 multiplied by 400 over 0.8. So that's going to cost 10,000. Well, given those 2 options, we would choose the first one. So we'd buy in 1 month's time. So let's look at what they could do with Y. The current position is to sell it, and they've got 200 kilograms and it will sell for 18 per kilogram, which means they will make 3,600 if they sell it. However, if they convert, it will cost them that 3,600 because that's now the opportunity cost, plus the conversion cost, which is 4 per kilogram. So the relevant cost, if they convert it, is 4,400. So their choice is either to buy all of it for 9,600. We only need to look at half of that for this second part. It's cost them 4,800, whereas if they convert Y, the relevant cost is 4,400. So what would they do? They would buy half, which is 200 kilograms in 1 month, which is 4,800, and they would convert Y to Z, which is 4,400. So the relevant cost is 9,200. On to 11. Which of the following statements regarding performance management in not-for-profit organizations is or are correct? Objectives can be non-financial or non-quantifiable, which makes it more difficult to assess whether objectives have been achieved. Be careful with these sorts of statements always, because there's 2 parts of there. It says that the objectives can be non-financial or non-quantifiable. We need to decide, is that true or false? If that's true, then we also need to say, is it also true that this second part is true? Both need to be correct. So is it the case that objectives can be non-financial or non-quantifiable? That is quite common in not-for-profit organizations. So the first part's true. Does that make it more difficult to assess whether they've been achieved? Yes, that does. So part 1 is true, which means it's either this one, or the bottom one. So I'm going to look at 3 next. Unlike commercial organizations, not-for-profit organizations only need to consider the interests of internal stakeholders when managing performance. That's not true. Not-for-profit organizations almost always have external stakeholders, so it's not 3, which means the correct answer is 1 and 2 only. And just for completeness, because these organisations have multiple objectives, it can be difficult to identify which ones are the most important to measure. That's one of the classic challenges around not-for-profit organisations. On to question 12. Using simultaneous equations, what's the total contribution to be earned from products B and T this month? This is likely to be a lengthy calculation. Simultaneous equations generally is. You might want to guess this, flag it, and then come back if you've got time. Dryson manufactures 2 products, blender B, toaster T, and the standard contribution per unit is 37 and 52. This month's been identified. The material will be limited to 2,000 kilograms and labour will be restricted to 3,200. The management accountant supplied formulas for the production constraints as follows. What they've done, they've taken the 2,000 materials, put it in here, and because B uses 2 kilograms and T uses 3, they've created this production constraint. And similarly for labour, using the 3,200s, B uses 3 hours, T uses 5, and that's how they've got that constraint. 2 main ways to deal with simultaneous equations. Option 1 is you rearrange 1 to end up with one of the unknowns, either B or T, on one side of the equals, and then you substitute into the other one and solve it. Or you multiply one or both by a number, so you can then subtract and eliminate one of the unknowns. I'm going to rearrange 1, and I'm going to do it as efficiently as I can. 3t goes across to the other side, leaving with 2b equals 2000 minus 3t, and then I take the 2 across. So when I rearrange that, I end up with b equals 1000 minus 3t over 2. And then I substitute this into equation 2. Everywhere there's a b, I will replace with this. So I've got 3 lots of 1000 is 3000 minus 3 lots of 3t over 2 is 9t over 2 plus the 5t equals 3200. So if I bring the 3000 to this side and then I combine these, so 9t over 2, and that's negative, and I've got plus 5t, which is 10t over 2, so I end up with t over 2 equals 200, therefore t equals 400. Now I need to find the number of b's. If t is 400, I'm going to substitute into this, so I end up with 2b equals 2000 minus, and it's 3t, so that's 1200. So 2b is 800, therefore b equals 400. And to find the contribution, I need to multiply this by the number of units of b, which is 400. I need to multiply this by the number of units of t, which is also 400. As they're both 400, I can save myself a little bit of time. I can just add the 2 together, 37 and 52, and multiply that by 400 to give me 35,600, which is this one here. As expected, we saw there were going to be quite a number of steps there. On to 13. Assuming the rackets are sold in a constant sales mix based on budgeted sales volume ratio, what's the total sales revenue they need to achieve in order to make this profit? They sell badminton and tennis rackets. The sales volume ratio is expected to be 3 badminton to 5 tennis rackets, with a weighted average contribution to sales ratio of 52.21. And fixed costs are expected to be 604,750. Well, to find specific profit, it's fixed costs plus the desired profit, all divided by the weighted average contribution to sales ratio. Okay, so fixed cost 604,750, the desired profit is 450,800, and the contribution to sales ratio is 0.5221 as a decimal, giving us 2,021,000. We need it to the nearest 1,000, which rounds up to 2,022,000. Okay, on to question 14. Which of the following are consequences of using ideal standards? Remember, ideal standards are those that are impossible to achieve. They're the ones that exist hypothetically when everything is running perfectly. One is common to them all, so if we can eliminate that, that will be efficient. Variance analysis is likely to produce adverse results. That's true. If we're comparing the reality to something that's impossible, everything is very likely to be adverse. So it's one of the top 3. 2 is common to all of them. So I'll look at 3 next. Allowances for normal efficiency levels are made. That's false. Ideal standards don't allow any allowances for normal efficiency levels, which means it's this one or this one. 4 can become more useful for long-term targets. That is true if we use ideal standards to set longer term targets, it gives something that can be worked to with ongoing efficiencies, ongoing improvements. They're not very good for short term. So the correct answer is 1, 2 and 4. And just to confirm on 2, demotivation of staff usually becomes a problem. That's true. Staff feel it's unfair to be appraised against something that's impossible to achieve. And now on to 15, which 2 of the following pricing strategies are most appropriate for Goretti Co. in order to achieve its objectives in relation to selling Zeus in Haman. Goretti is a manufacturer of electronic goods. One electronic device it produces and sells is the Zeus. Goretti wants to sell in a new market, the country of Haman, and its objectives are to set a minimum acceptable price which is most likely to discourage new entrants and shorten the initial period of the product life cycle in Haman to reach the growth and maturity stages quickly. First option, transfer pricing. This is nothing to do with transfer pricing, that's for interdivisional transfers. Market skimming. This is setting a high price initially, targeting those early adopters, and then reducing the price gradually over time. That would have the opposite effect to what they're trying to achieve. A high price tends to encourage new entrants, so market skimming would have the opposite effect. Market penetration, that's correct. Market penetration is setting a low price with the aim of discouraging new entrants. If they look at an organization with a new product and it's a low price, they struggle to see where the profitability is and they're less likely to enter that market. Next is relevant cost pricing. Unusually, I'm going to say that's correct. We tend not to use that for pricing strategies. That's more for one-off projects. But because they want to discourage new entrants, relevant cost pricing means they could set the price as low as they can based on relevant costing principles, and that will make it more difficult for new entrants. Price discrimination by product version. Well, there is no product version here, so it can't be that one. And complementary product pricing. Again, there are no complementary products for the Zeus. One thing I didn't mention is market penetration also speeds up the process so that you do get to growth and maturity more quickly because you gain market share more quickly. So that's the end of this Section A debrief. Thanks for listening.